So it's important when choosing a real estate agent that your agent knows the difference between houses that will and won't qualify for FHA loans. It's one of our specialties. Welcome to my classroom. I'm Chris Collette, the real estate professor. So today I want to talk to you a little bit about what FHA loans are. So I work with a lot of first-time home buyers. And by the way, first time sometimes isn't an exact accurate representation of what that means. People often say first-time home buyer, but a lot of the loan programs that give you sort of special treatment, you don't actually have to be a first-time home buyer. Many of the programs, you just have to have not owned a home in the last few years. So if you owned a home for a long time, maybe don't own a home anymore, it's been 5 or 10 years, maybe now you're thinking about buying a house again, there's a good chance you're still going to qualify for first-time home buyer programs. What we really mean is that the government wants you to buy a house because it's better than renting. So they give you special treatment if you can't qualify for a regular loan, and that's the key to FHA loans. So I want you to think about it like this. In general, if you're renting or if you own a house, you're paying someone's mortgage. You're either paying your own or you're paying your landlord's. So the government says we want people to own homes. It's just better financially. It's the #1 way to build wealth in the United States. Even at the high level, more than 90% of millionaires and billionaires own real estate as an investment. As Mark Twain says, buy land, they're not making any more of it. So if you're thinking about buying a house, you're probably thinking, all right, well, I'm a first-time home buyer, I'll probably get special treatment. I want you to think of the FHA loans as a way to get a loan if you maybe don't qualify for a conventional loan. Conventional meaning traditional. So the government says, well, we want, say, Timmy to buy a house. Problem is Timmy is this risky. And maybe this level of risk, a lot of banks don't want to let him borrow. If Timmy was this risky, then the banks would say, hey, here's our money, go buy as many houses as you want. So the government says, hey banks, we want you to take Timmy at this risk level. We want you to pretend that he's less risky than he really is. And when I say risk, what I mean is, how good is his credit score? How much money does he make? What are his expenses every month? How much money does he have in the bank? All the things that you would need to prove to qualify for a mortgage. Well, the bank says, okay, but he's kind of risky. Why should we let him borrow $200,000? The government says, well, we actually think he's less risky because we're going to make sure that he only buys a house that isn't likely to be foreclosed on in the next few years. The bank says, how are you going to do that? And the government says, well, we're going to make sure he picks a house that doesn't have a roof that's about to fail and need to be replaced. We're going to make sure he picks a house that doesn't have paint peeling on the wood exterior or the wood trims or the wood windows. Because when paint is peeling, water gets in, and then you end up with rotted framing in your house or rotted siding. These are the sorts of things that cause most foreclosures. The #1 cause of foreclosures is an unforeseen large expense in the first 2 to 3 years of home ownership. This could be you buy a house and the radiators, the heating system, is going to fail in the next year or two because the boiler is 50 years old. So the FHA loans have stricter appraisal standards, not inspection, but appraisal. The appraiser is going to come in and he's going to say, what is it about this house that could fail soon? And as long as there's nothing that's a big ticket item, he's going to say, great, this qualifies for FHA. So it's important when choosing a real estate agent that your agent knows the difference between houses that will and won't qualify for FHA loans. It's one of our specialties. The most important part about FHA loans is that even though they're restricted, you still get 90% of the houses as an option. Problem is if you want that extra 10, those are kind of eliminated for you. So if you're thinking, man, I really want to buy a fixer-upper, good chance you won't be able to use an FHA loan. Or you're thinking, I have an uncle who's a contractor, I'll buy that house that needs a new roof and he'll do it for half price. Problem is you probably can't use an FHA loan on that either. So in that case, you'd want to use a conventional loan. That's a traditional mortgage. The thing about traditional mortgages too is that in general, they're a little bit better financially in the long term than an FHA loan. They're just a little bit harder to qualify. For example, your debt to income ratio on a conventional loan might be 40, 42.5, 43, 45%, meaning that you spend all in, all your expenses for the month, about 45% of your income. With FHA, they let you go all the way up to 55. That means you're actually paying more of your income every month to own that house. The other thing is that the PMI, that mortgage insurance you have to have, that sort of protects the bank in case the value of the house drops, that PMI does not automatically go away. On an FHA loan, the MIP, mortgage insurance protection, stays for the entire 30-year life of the loan. With a conventional loan, it drops off once you have around 20 to 22% equity in the house, usually around owning the house for 10 years. So in general, if you want to get out of PMI with FHA, you're going to have to refinance. Refinancing costs thousands of dollars. So if you can, go conventional. If you can't, go FHA. Either way, stop renting. You're paying somebody's mortgage, it's just not yours. So if you have questions about buying a home for the first time, FHA loans, mortgages, the process of buying, will this house qualify for FHA that I want to buy this weekend? Reach out to me and my team. If you're thinking about buying, selling, or investing in Mass and New Hampshire, I'm Chris Collette, the real estate professor, and I'd love to help. I'll see you guys next week.